Hi everyone, and I'd say formally, Crystal Boyd of Premier Group. We're here to discuss the One Big Beautiful Bill.
I'm Joye Sistrunk of Premier Group, Gina Young. So Gina, go ahead and introduce yourself.
Good morning, everyone. Thank you so much, Joy and Crystal. We've gotten a lot of questions about how the One Big Beautiful Bill impacts each of us.
What we've seen here is that there's an increase in the amount of SALT, which is going to be state and local tax. That means a lot because for the people that itemize, meaning lower that tax liability, they usually have more than the standard deduction, which is to lower the tax liability there. And that $40,000 is really going to help get you there. They lifted that cap on there. And it's also going to help with the suspension of those taxes.
For some of our clients, what does that mean? Why should they be excited about that?
A lot of them, they're stuck with that $10,000 cap. They've been leaving a lot of state tax on the table, directly impacting their tax liability. In the past, before the 2018 tax changes where that $10,000 cap came into effect, people typically got refunds. Well, that changed for a lot of people once that cap was instituted. You can imagine if someone has $40,000 in state taxes, they can only take up to $10,000. They're leaving $30,000 on the table.
The next one that we're going to talk about is what, Crystal?
Bonus depreciation and how it's up 100%.
What does that mean? You know, depreciation is when you take whatever the cost of something is and you spread it over a couple of years. But what does it mean from a tax perspective?
Being able to lower that tax liability, able to fully expense something for the year. So say for instance, it's a purchase of some equipment, computers, right? Instead of depreciating that over 5 years, taking a section of that amount off your expenses income each year, you get to take the whole amount. So if you spend $20,000 on computers, we get to take $20,000.
No matter what business you're in, we want to make sure that people are aware that bonus depreciation at 100% is back.
If you deduct it all now, 2025 for most people has been very turbulent. Like, does it make sense to take 100% now? Because next year, if you're expected next year to be better than this year, then you won't have as much to deduct if you take it all now. So we do want to consider, the longer you're in business, the more you expect your business to grow. So we also want to look at the long-term effect if you do deduct that 100%.
That's where tax planning comes in, and it's so important so you can look into the future.
The next item that I know has been out is that auto loan interest, and being able to deduct that.
It's going to be a big change because we haven't seen this, and this is only temporary, bill 2025 through 2028, and it's a new deduction, and it'll allow you to deduct your interest on your personal vehicle. But that vehicle had to be assembled in the U.S. We need to make sure that people know that.
It's so important to meet with your expert team because some people will not read the fine print and think that that applies to any vehicle, whether it was manufactured in the U.S. or not.
Another item is no tax on tips and overtime with clients. They get the overtime and they have more tax on their wages and all of this. So you actually get to keep more of what you earn.
We've heard a lot of this conversation in the news, right? About tips. Just make sure that you're fully informed. We have clients that come to us and said, yeah, I heard this on TikTok. And not saying that none of the information out there is relevant. However, you want to be able to speak with someone.
For the government people or someone who was impacted by the government shutdown, if you took funds out of your 401k, please be aware that you can return those funds within 60 days. And if you do, it's a non-taxable event. But if you don't, in addition to your W-2, you're going to get a 1099 that you then have to report that distribution on, and that is going to raise your tax bill, and it's going to throw you into a new tax bracket. Some things in the Big Beautiful Bill are not effective until 2026. Things like that impact Social Security. We've heard the Trump accounts. The Trump accounts are only for a specific group of people who were born, I believe, after January 1st, 2025. If you hear it in the news, it's not for 2025 when we do your 2025 taxes. If you're a government employee, we have a scheduling link for you to go ahead and schedule time to talk to us about your particular situation. Because it's coming towards the end of the year, we have about 5 to 7 slots available for business owners as well. If you want to talk about your tax situation and you'd like to do some tax planning, we look forward to talking to you because we know that we can add value to whatever situation you're in.
There was a time when tax planning was reserved for those who are high wealth earners, other people. We live in a day and time where tax planning is critically important for all of us.
We definitely look forward to serving you guys and making sure that we're able to use our expertise for your benefit.